In the entire world of real estate investing, there's a title that's so exclusive, so incredibly hard to get, that only one single company holds it. We're talking about being a Dividend King. So today, we're going to dive into the story of Federal Realty Investment Trust, or FRT, to figure out one simple thing. How in the world do they build a financial fortress that has survived every single economic storm for more than half a century?
Okay, let's just start with this, because this number right here, it tells the whole story. 1. Out of hundreds of publicly traded real estate companies, just one has managed to raise its dividend every single year for over 5 decades. Not 10, not 5, just one. It's this incredible fact that makes FRT's story so wild and absolutely worth digging into.
So what exactly is a dividend king? Well, it's pretty much the absolute top tier, the elite of the elite when it comes to dividend-paying stocks. A company has to increase its payout for 50 straight years. No breaks, no pauses, no cuts. Just think about that for a second. That means through recessions, stock market crashes, and even global pandemics, that dividend check has to get bigger. It's a testament to some serious financial discipline and a business model that is practically bulletproof. So how did they do it? How did they pull this off? Well, it all goes back to the very beginning. We've got to look at the blueprint for resilience that was laid out when the company was founded, way back in 1962. And this wasn't just some business plan. It was literally a design for a financial fortress.
And here it is, their simple but super powerful 3-part strategy. First up, prime locations. They went after wealthy, crowded coastal markets where it's just incredibly difficult for any new competition to even think about building. Second, they filled these amazing spots with high-quality, necessity-based tenants, grocery stores, pharmacies. These are businesses that bring in reliable rent checks because, well, people need them, good times and bad. And third, they played the long game. They focused on the quality of their properties, not just the sheer number, all about building value that lasts.
Now, having a great blueprint on paper is one thing, but the real test is how it performs when things get ugly. And for Federal Realty, that pressure came in the form of decades of economic crises. Let's see how this plan was truly forged in fire.
Just look at this timeline. Seriously, it's like a who's who of modern economic disasters. You've got the stagflation of the 70s, the Black Monday crash in '87, then the dot-com bust, the 2008 Great Financial Crisis, and of course, a global pandemic that literally shut down retail. And through every single one of these events that absolutely crushed other companies, FRT didn't just hang on. It kept on raising its dividend.
The 2008 crisis was the ultimate stress test. It was an existential threat for most real estate companies out there. Credit markets completely froze, property values were in a free fall. And yet, as this quote makes clear, FRT basically just sailed right through it, continuing its dividend growth without missing a beat. This one achievement really cemented its reputation as a fortress.
So what was their secret sauce back in 2008? Well, what's so interesting here is the contrast. While competitors were loaded up on debt and being forced to fire sell their best properties at rock-bottom prices, FRT had a conservative balance sheet. They had cash. Their high-quality tenants kept paying rent, and their management team was proactive, not reactive. This was their crisis-proofing strategy in action.
But here's a really crucial point. Federal Realty didn't just stick to that original 1962 playbook forever. To stay on top, you have to evolve. They knew they had to build a modern real estate fortress, one that adapted their strategy for a completely new world.
And this chart shows that evolution perfectly. While retail is still the big piece of the pie at 75%, they've been strategically diversifying into office and residential spaces. This wasn't some random move. It was a very deliberate plan to transform their properties from just simple shopping centers into resilient, mixed-use communities where people can actually live, work, and shop.
Exactly. They recognized the future wasn't just about transactions, it was about creating destinations. They started turning their properties into what you see described here, these vibrant urban villages. The whole idea is to create a complete ecosystem, right? The apartments and offices provide a built-in customer base for the stores downstairs, it generates multiple streams of income from a single property, and creates an experience that online shopping just can't touch.
So let's do a quick recap of the pillars holding up their modern fortress. It's still built on that foundation of irreplaceable locations and a rock-solid balance sheet. But now, it's been beefed up with a more diverse mix of tenants, a proven knack for redeveloping their own properties for new growth, and an experienced leadership team that keeps that long-term vision alive. Okay, let's switch gears and put on our investor hats for a minute. After everything we've looked at, is Federal Realty really the safest stock in real estate? To answer that, you've really got to weigh the good against the, well, potentially challenging.
This slide lays it out pretty clearly. On the pro side, it's obvious. You've got unmatched dividend reliability and a portfolio of absolute trophy assets. The balance sheet is rock solid. But on the con side, it's still heavily tied to the retail sector. Its focus on coastal markets creates a bit of concentration risk, meaning a problem in those specific areas could hit them harder. And like all real estate, it's sensitive to what happens with interest rates. Finally, quality like this often doesn't come cheap, which means the stock can be more expensive, and that might limit some of the massive future gains.
So here's the bottom line. Federal Realty has built a fortress that has proven itself against pretty much every economic storm you can imagine for the last 50+ years. Its strategy of quality, discipline, and adaptation is just undeniable. But as we look to the future, the big question remains, is that same fortress truly prepared for what's next in retail, or is an entirely new kind of storm brewing just over the horizon?